Hey, cash flow maximizers. Much of this channel is dedicated to the infinite banking concept, or bank on yourself, or family banking, whatever you want to call it. It's the use of specially designed, high cash value life insurance. And the reason we look to life insurance companies for this, it's not because we have any special affinity for these companies necessarily. They just have a really great product for what we're trying to do. Not only that, but life insurance companies are stronger, more highly rated, and they've been around longer than any bank in our country. So when we look to these specially designed high cash value policies, we do that because we expect a lot out of them. And they have a lot of guarantees that we just don't get with anything else. In today's video, I'm talking to the real estate investors, and I'm going over why an infinite banking policy fits very well with what they're trying to do, and the concepts should be very familiar with them. I'm going to give you 10 ways that an infinite banking concept is similar to real estate in use and function. Let's get into it.
Oregon Cash Flow Pro offers free money management advice to help you take control of your finances. And now here's your host, personal finance enthusiast and licensed insurance broker, James Barber.
Now, your infinite banking policy is a financial tool. And as many real estate investors know, this is not a choice between do you get an infinite banking policy or do you invest in your real estate? You're not making an either or choice here. You can do both, and you can do both very effectively. So it's not real estate or life insurance, it's real estate and life insurance. There's so many real estate investors out there that already realize the value in the infinite banking policy due to the liquidity that you have during life to utilize the cash value that you build up in the policy. And they're actively using their policies to buy, build, and protect real estate. Oftentimes, the idea is take the profits off your real estate, use those for premium payments in your infinite banking policy, then borrow against that cash value that generated to buy more real estate, to keep the process going. This is all about the velocity of money. We want to run money through the life insurance policy and keep that money moving. This allows you to have $1 doing multiple jobs. Because most of the time, you have $1 and it does one job. That $1 is sitting there for an emergency. That $1 might be buying a product that you need or paying for a service that you need. And when it does that, it's expended, it's gone. But as you know, with real estate and with life insurance, you can have those dollars doing multiple jobs. With real estate, you have a dollar that is invested in the real estate and that it's growing, but it's also generating revenue if you have rental income coming in. It can be appreciating, so it can be gaining in value. It can be offering you tax credits or depreciation. It can also provide a nest egg, as well as access to it for other purposes. You'll find all of these qualities within the infinite banking policy. So let's go over the 10 ways that your infinite banking policy is like real estate. Number 1, what we love about real estate and our infinite banking policies is that it grows tax-free. You buy a piece of property or you start your infinite banking policy, and while both of those grow in value, you do not have to pay any taxes on those funds. Quite a bit different from the stock market, where when it kicks off dividends or it gains in value, you might have capital gains taxes or other types of taxes that you end up having to pay year to year. Number 2, your premium acts like a mortgage in that each payment grows equity in your asset. With each payment you make towards real estate, your loan balance goes down, your equity goes up. Whether you're making the payment or you have a tenant making the payment, doesn't matter. Functions the same way. With your life insurance, every premium payment you make, you're growing cash value within that policy. Number 3, we can generally expect equity to grow between 4 and 6% per year. Now, in real estate, you have the opportunity to get a lot more growth but you do also have some risk of loss at some point, though it's fairly rare when real estate prices go down. But in any particular property, it could drop in value. But over the long haul, you tend to see approximately 4 to 6% growth. And it's the same thing with our high cash value infinite banking policies. When we first start them out, our expenses are a little bit higher than what we've paid into premiums. But we quickly make that up over the course of a few years, where pretty soon it's kicking off dividends, and over a 30-year period, you're gonna earn 4 to 6%. Something to keep in mind, this doesn't carry the risks that real estate does. You're not going to randomly lose value. You don't have to worry about repairs and maintenance or other types of emergencies that may cause it to lose value. Number 4, you can access the equity tax-free through loans. It's just much easier to do this with a life insurance policy than it is with real estate. Now, as you know, to get a loan from real estates, you have to go to a bank. You need to have good credit, you have to have income, you have to be able to prove to them that you're going to be able to pay it back. You also have to have a certain amount of equity available. They may or may not give you as much as you have that's available in your property. A lot of that depends on the financial situation of the bank that you're talking to. So there's a lot of different factors involved when you need to access that equity in real estate. We have none of those problems within your infinite banking policy. You're contractually guaranteed to be able to borrow against it. You don't have to go through a credit check. You don't have to get approval from anybody. You just tell the insurance company that you want to take a loan against your policy, and they give you a loan. There's no payback period. There's no minimum payments due, because eventually the loan is going to get paid off at some point. Worst case scenario, it gets paid off when you pass away, and it gets deducted from the death benefit before it goes to your heirs. So it's pretty neat, and it's one of the highlights of why we use life insurance for doing our infinite banking. It makes your cash very liquid while also providing a solid asset for growth. Number 5, maintenance. In real estate, we know that we have regular maintenance that we have to do to keep up on our buildings or our houses so that they will continue to appreciate in value. Life insurance is fairly similar in that the ongoing cost of the actual life insurance is like the maintenance, because every payment you make, it ensures that it's going up in value. Now, you're not going to have the maintenance costs that you do with real estate, in that you won't have an unexpected roof to replace, you won't have plumbing to worry about, you don't have electricity to worry about. You know when you sign up for the policy exactly what your maintenance costs will be. And you also have the added benefit of being able to turn off those maintenance costs. You can turn off the cost of the life insurance in your infinite banking policy if you need to. A little bit more flexibility, but it does operate very similar to how you would maintain your real estate. Number 6, you can rent it out. Clearly, what a lot of our real estate investors do is they rent out their property. The tenant ends up making the payments for the loan. With life insurance policy, you don't have a building that you can rent out, but you can rent out your money, otherwise known as giving loans. So you can be the banker in this case. You lend out your money, and then they pay it back to you with interest, and what goes above and beyond what you get charged for interest for making that loan, and use that to grow your policy. And you're certainly welcome to put any arbitrage that you get on interest back into your policy. Number 7, the equity that you access reduces the net value of your asset. So if you have a house that's worth $300,000 and you take a loan out for $200,000 on that house, you have $100,000 net equity in that asset. It works the same way with life insurance. If you have a $300,000 cash value in your policy, you take out a $200,000 loan, you still have $100,000 in equity that you can access. Now with your house, when you pass away, that loan is going to get paid off, but what your heirs get will be reduced by the amount of the loan. So if we have that $300,000 house, you have a $200,000 loan, the heirs will get $100,000. With the life insurance, you have $300,000 in cash value, you have a $200,000 loan, you have $100,000 in cash value, but your death benefit is probably $1 million or $1.5 million, whatever it ends up being. Your heir is going to actually get the full death benefit minus the loan. So instead of just the $300,000 in cash value that you've generated, they might get 1.5 million minus the $200,000 loan. So they would end up with 1.3 million. So pretty neat, but it does function the same way when we think about how loans against our assets will reduce their net value. Number 8, your real estate steps up in basis upon your death. So one of the things that a lot of real estate investors do is they do something called buy, borrow, and die. You buy the property, you borrow against the property tax-free so that you can access that equity, and you continue to do so until you pass away. Because as long as you do it that way, you have access to that growth in value tax-free. If you were to sell that property though, you would now have capital gains that you would have to pay taxes on. However, if you hold on to that property until you pass away, your heirs, they inherit that property with a stepped up basis. So on the day that you pass away, whatever that property is valued at is what they inherited at. So it does away with all of the gains that you made in that property throughout your lifetime. Life insurance works the same way, in that your death benefit is tax-free to your heirs. So while you're growing your policy and you put money into it and it has growth beyond the basis, meaning it gains in value more than what you've paid in premiums, if you were to withdraw all of that cash value out of your policy, or if you were to sell your policy and have a gain above what you paid in premiums, you would owe taxes on it. So it's tax deferred in this case, but you can access that cash tax-free through loans, just like the real estate. And when you pass away, your death benefit goes tax-free to your heirs. So it's just like it steps up in basis to the full death benefit when you pass away. Number 9, in real estate, you have a 1031 exchange that you can do so that you can roll over any profits that you had from one property into another property. It's called a like-kind exchange. Life insurance has a similar feature, and it's called a 1035 exchange. And it functions almost the same way, except you don't have the same challenges that you do with real estate. With real estate, you have certain time periods and you have a lot of rules in place to do a 1031 exchange. With a 1035 exchange, you've already identified the new policy that you want to move into, and that all happens simultaneously. You just don't have the concerns of violating the rules around the 1035 exchange. Of course, it's not often that you're going to do a 1035 exchange if you are in a good product. The only time we look at doing the 1035 exchange is typically when you just made a bad decision. You went with an agent who designed a policy poorly, or you're in a company that you just don't want to work with anymore. So we can do a 1035 exchange, we can get you out of that. Oftentimes we'll do 1035 exchanges to get out of universal life products and get into whole life products so that you don't have unexpected expenses later on in life that you're not going to be able to afford, and your life insurance is suddenly no longer available as you get older. And number 10, you can sell it. Yes, with real estate, you can sell it at any point in time. There's fees associated with that. Whether it's through your realtor or a buyer's agent, you end up having some type of costs associated with that, as well as your closing costs. Life insurance, very much the same way. You own this, it's an asset, just like your deed, and the courts have ruled that you can sell it as well. Those are called life settlements. And for whatever reason, if you have the need of getting rid of your policy, there may be somebody out there that is willing to buy it. You have the ability to sell it, just like real estate. So that wraps up our 10 ways that life insurance is like real estate. I'm sure there's more out there. If you can think of some that I didn't list, tell me about them in the comments section below. I'd love to hear from you. And if you found value in today's video, please like and subscribe to the channel so that we can continue together on our financial journey. Thanks for watching. Be sure to check out this video on infinite banking because there's so much more to these products.